Welcome back to the Dividend Diplomats YouTube channel, guys. You got Mr. Buckeye over there, Bert, the Hurt Locker, and Lanny, your boys here, your favorite dividend investors on the YouTube network, guys. We're bringing out bangers. We're bringing out passive income. We're building up dividend income to financial freedom, guys. Bert's been talking a lot about real estate investment trust, and I said, you know what? It's my time to jump in the ring to talk about one that I own. And
hmm
is it time to buy, or could this be a yield trap?
Smash that subscribe button. Give the video a thumbs up. Man, I am pumped up here, Lanny, that you found a REIT that you are liking. It's the sector that I'm finding the most value in right now between that and utilities, which we covered on Sunday as well. There are a lot of great potential opportunities. Now that interest rates are higher and may not be coming down as fast as everybody's expecting, these two sectors have gotten beaten down so far to start 2024.
Yeah, this stock is actually down, I think, quite a bit this year, about 18 and 20% here. Um, I own I own 379 shares in my taxable account. Come at me, guys. I own a REIT in my taxable account. Just bring it. Um, yeah, pretty interesting. I know you've been buying AMT, really digging in. You've been buying Realty Income, guys. But this is a different REIT here. We're talking about, if we rewind the tapes, way back in the day when I used to own Store Capital, STOR, the single tenant REIT, they had sold and went private. Or did they end up going public? I can't remember.
Thought they went private because they were going to
Gotcha.
get bought out. You were going to get all cash. And I think you sold them a little early because it already reached the peak of where you were going. So you just took the gains and ran.
If I just ran with the money and said it's mine.
My money, no one else's.
So, move those proceeds into, again, Broadstone, Net Lease, BNL, another single tenant REIT here, guys. So what that means is the building has one tenant in there. So, Dollar General, that's one tenant owned by maybe Realty Income, but Broadstone Net Lease also owns plenty of space within Dollar General's footprint. Just, you know, so it's very funny and interesting to see kind of who owns what and who shares what in the space here. But they're, BNL or Broadstone Net Lease is spread within all the industries. Called industrial is their main focus, but healthcare, warehousing, restaurants, retail, office. Um,
Mhm. Yeah, I like it. And that's what's unique about them versus like Realty Income, where it's single tenant retail. At least here at Broadstone, you go to their website. I think it's interesting. Industrial. It says they own a winery, bottling, and warehousing facility up in Napa and Sonoma. So think about that. That's not moving quickly. These wineries are going to build their bottling, they're going to build their warehousing. That's not something like, hey, we don't like what Broadstone's telling us. We're just going to go build another one and move operations. No, you're pretty ingrained in there. And that's what's kind of cool about them. You go to healthcare, they have some emergency hospitals for humans and animals. So it's like, again, that stuff's not moving quickly. So if you're going to diversify out of retail and branch out into multiple areas, find those sectors that are unique, that are difficult, and have a lot of sticking power for your tenants. And that's what's cool about Broadstone's portfolio.
yeah, and a lot of rent percent of their overall portfolio. The single tenants don't make up a lot either, so they're fairly diversified, not just within the industries, but with how their space is rented out by the tenant.
Mm-hmm.
And I was peeling back through, guys. Again, they're down, as Bert said, because the rates probably are higher for longer. But peeling back their fourth quarter earnings slash, annual earnings release here, guys, and they hit $1.41 adjusted funds from operations, which is the equivalent of EPS for the REIT conversation here, guys, in 2023. They don't have any debt that matures until 2026. So do you guys think interest rates are going to be higher or lower in 2026?
Well, I think
Could be
people,
lower.
as a joke, I say people are struggling to figure out what's going to happen in 2 months,
Yeah,
let
right.
alone years. But God help us if interest rates are not lower by 2026. In all seriousness, so I would support that arrow down because something will be wrong if that's the case.
So, in 2 years, guys, BNL has a chance that, oh yeah, here comes our debt up for maturity. Okay, they're not at the 5, 6, 7% rate. Now we're probably hopefully in the 3, 4, 5% range for them.
they're doing that NWO entrance in there, you know, where they're just like walking.
Now. And then, BNL also collected, gosh, almost 100% of all rents that were due in 2023. They collected 99.8% of all rents due, and their space is leased up at 99.4%, according to their release. Again, so almost
Beautiful.
100% leased up, Bert.
Beautiful, absolutely beautiful. And these are all great things that you want to have here with that increased revenue of what, 9%, strong AFFO, no debt maturing. Man, this is just so beautiful here for BNL. The financials are looking great. And it's positive. Price is going down. I see exactly why this continues to pop up here on your watch list.
Yeah, and I'm not going to throw a boat at it because I already own 379 shares, guys, but we'll run them
Yeah.
through the, Dividend Diplomat stock screener focused on the metrics of price to AFFO ratio, the dividend payout ratio, the history of growing dividends, and we'll look at the dividend yield, guys, which again is pretty interesting. This is why we're bringing it to the table because it's like, wait, am I missing something here, guys? If you already see that we're missing something, let us know in the comments because when we get to the yield, it's
Yeah.
like, I'm not buying it for that, but man, that yield is
Yeah.
high.
It's the cherry on top. It's the biggest comment that I get in all these AMT videos. Yield's not high enough for a REIT. So let's go through the metrics here. We'll run them through. We'll do the price per AFFO ratio, obviously, because a REIT's an FFO, and that's what you typically use. That's the standard, not earnings per share. Payout ratio, history of increasing dividends, and that dividend yield will be that bonus metric there. And Lanny, let's kick this sucker off. Why don't you tell them about that price to FFO ratio?
We'll kick it off, Road Dog Jesse James style, guys. They're trading at $14.79. They're expecting in that release, they said $1.41 as well for 2024. So it's about 10.49, which is fairly low in the REIT space right now.
Yeah.
We've seen anywhere from 13, 14 up to 20x.
Mhm.
So 10.49, guys. But what about the payout ratio for this REIT?
Annual dividends $1.14. That gives you a payout ratio of 80.85%. And remember, REITs are typically high payout ratios there. So you have AMT for comparison, which has a significantly lower yield with a payout ratio in the mid 60s. Realty Income's in the mid 70s. So seeing BNL with an 80% payout ratio, nothing really to sneeze about for a REIT.
Yeah, Bird's not going through tissues over there, he said.
No, I'm not. Not the way my daughters are going upstairs through
Uh,
them. We might need to buy some. Good thing we have stock in the Kleenex
there
company
we go. Yeah,
because tissue.
representing
Because
PG, and
we are supporting them well with how many tissues my daughters think they need to go through.
they've been only paying a dividend since 2020, guys.
Yeah,
And so they've only been growing the dividend for 3 years. Um, and they do about, I don't know, a cent to a half, every year. Um, last year's overall dividend growth was 3.64% for them. So probably close to Realty Income on the growth rate standpoint. Um, and it's kind of trended slightly downward since the prior year was at 3.77 to 3.64. So still dividend growth because Bert, what's that dividend yield?
7.71%. So higher yield, lower dividend growth, lower yield, higher dividend growth. That's typically how it works. So if you're going to see and that's not even that low for a REIT, a 4.45% 5-year, 3-year dividend growth rate for BNL is not that low for the sector, especially when you couple it with that 7.71% yield. That's phenomenal. It's over 10% combined.
So guys, they have a 10.5 price to AFFO, payout ratio of about 81%, have been growing dividends every year with a 7.71% growth rate, guys. So, I might nibble here at a couple more shares, maybe grab 3 more shares, round it out,
Mhm.
somewhere around $45 to $50 just to grab them at this price range. Even if dividend growth is kind of limited, even if it's only 2%, but that still is, closer to 9.5, 10% on the overall dividend compound factor. Um, you know, the way that they set up their space, I'm a fan of. So
Yeah.
I'm here to say, guys, do your own research, but I'll probably buy a couple shares of this stock.
Yeah, and it's one worth considering. I have a few positions in my Roth as well that are legacy positions that I'll save that for a different video. They have some higher yielders that I haven't been happy with them with. So obviously, like you don't want to just cut yield for no reason. So a company like BNL that would give you a potential premium yield into a company you like better might be the move to make. So I'll add this one to the list of things to consider.
What
It's not a formalized thought yet, everybody. So I'm not going to share it with you yet.
what do you guys think about BNL? Is this a yield trap? Is there a dividend cut or reduction looming here for Broadstone net lease? Let us know what you guys think about Broadstone in the comments below.
If you haven't already, subscribe to the channel. Give this video a good old fashioned thumbs up. And what do we need to tell all the diplomaniacs out there, Lanny?
Well, let me tell you something, brother. You're either with us or you're against us, Jack. That was Bert, the Hurt Man, and Lanny from the DD over and out.